Good morning, everyone. Welcome to the Thursday morning trade findings and adjustments for May 21st, 2020. This today happens to be, let's get it rotated a little bit. It happens to be, for me, this bugger's birthday right there. So my fourth boy has been baptized by his older brothers on how to man up, is what we keep telling him all the time. But he was born on May 21st. He turns 13 years, and there's my motley crew a month ago hiking up to what's called the Hidden Falls. An update on the family. We're all doing good except for this little one right here. She has a low-grade fever. I am still in the camp that, plain and simple, I guess I'm going to say that I still do think, for the most part, that the coronavirus is just how do I say it? And I don't mean to be callous. I do think it's just a bad flu. I know Maud will probably smack me upside of the head for even saying that, as she probably should. But as of right now, if you don't run 101 fever, temperature, excuse me, that's a fever. If you don't run 101 fever, they don't test you out here in Utah. We run up to 99, 100, but we haven't really had a bad fever run. So we are okay as of right now, trying to make it till next Friday, and we will feel like we will be in the clear. With that said, I had 3 of you that called or texted. So let me take that back. 3 of you that called and or texted. 4 more of you who sent an email. Just to let you guys know, we are doing okay. And shame on parents for letting kids try to get back to normal. What was I thinking? But plain and simple, it is what it is. We made the mistake of having our kids play with some people that, for all intents and purposes, were not smart on how maybe they were trying to isolate themselves from others that might have this coronavirus. And nothing like having your kids over to swim in chlorine with a couple other kids to find out the father has the coronavirus. So we're doing everything we can to isolate ourselves from others, and we really are doing good. Thank you for the 7 of you that reached out to me to make sure things were doing okay. With that said, a couple of you with every right said, so Kevin, what happens if I become incapacitated, right? What is the succession plan for my money if I bite the dust? So the easiest way to say it, if I bite the dust, then if I bite the dust, first in line is Keith Bybee. Keith Bybee would take over the business. He would continue to run it just like we always have. I've been with Keith probably going on 2, 3, 4 years now. A smart individual. We probably have a generation gap in between us. I think there's a 10-year difference in between us. But Mr. Keith Bybee would be the newfound owner, managing partner of Hurley Investments, and you would see hardly anything move at all. Everything I'm doing, he does. He's a younger generation than I am, so he sees things a little bit differently. Maybe doesn't have the experience I do, but truly understands options, adjusting, protecting stock ownership. has bought into the collar trade and seen it work in his own accounts, actively trades money himself in the hundreds of thousands of dollar range. So he's no, hey, I'm going to stick a little piddly 10,000 in and see what I can do. He is a professional trader and an expert in the industry. Second in line is Jeffrey T. Smith, a trader of over 38 years, I think, or 33 years. I don't remember exactly, but he's got 30 plus years, probably 36 years. He would become the number two. If Keith and I decide to bite the dust together, going out to lunch or what have you, Jeffrey T. Smith would take over. He's out of Denver, Colorado, has more experience than Keith and I combined, but has always struggled to be able to say, hey, I'm going to leave other work that I do and other businesses he has on the side to focus full-time on the stock market and full-time on Hurley Investments. Obviously, if we're both gone and he inherits 20 some odd $20 million, it becomes much easier for him to focus on it. But number two would be Jeffrey T. Smith. Again, more experience than Keever I combined, truly understands options, and he would be more active. He just has other businesses that he runs, and for that reason, he's taking care of those. Third in line would most likely be Michael Verdon. He is the owner of Delta Hedge out on the East Coast, out in the Mississippi, Tennessee area. A phenomenal trader, older than I am. He's got me by probably 7, 8, 9 years, but a gentleman that truly understands protection and the need to protect, as he's gone through. He's gone through and seen probably 10 market crashes in his lifetime. And then last but not least, if all three of us were to bite the dust at the same time, or I guess all four of us, right? Jeffrey Dunyan, owner and managing partner, I guess owner and CEO of Safe Option Strategies, would have 90 days to get licensed, bonded, and insured, and would jump into the place. Myself, Keith, Jeffrey T. Smith, and Michael Verdon are all licensed, bonded, insured, and the succession plan for Hurley Investments is registered with the Utah State Department of Commerce and their Securities and Exchange Division. So that is what would happen to protect your money if, well, I guess that's the succession of the Hurley Investments that's, again, registered with Securities and Exchange Commission. If we were starting to bite the dust all the way down through every current employee with Hurley Investments, and what I have is contingency plans on top of that. So again, first in line, Keith Bybee. Second in line, Jeffrey T. Smith, both currently registered underneath the Hurley Investments umbrella. Excellent traders, excellent individuals that I think have the highest integrity that you can find in the industry. I then would run out to Michael Verdon, the owner of Delta Hedge out in Memphis, Tennessee. Great individual. We used to work together. I parted ways with him, and he is the only one that I haven't wanted to kill afterwards. But a lot of integrity there, a lot of honesty there, and I think he would be an excellent person to take over. And then last but not least, Jeffrey Dunyan through Safe Option Strategies would have 90 days to get licensed, bonded, insured, and to take over from there. So today, getting through what I would like to get through, I've got 3 things to talk about today. As I woke up at 6 o'clock and I started looking at down futures and everything, I got frustrated. I got frustrated today. I should type that in there. I got frustrated today because nothing is making sense. But really, should anything be making sense today? A quick question to the group, and please answer. Should anything be making sense today? In fact, I love the comment, Abraham, Nowadays, instead of happy birthday, we can use happy volatility day. Happy I'm going to get out of my house day. Yeah, there you go. Not really, but Lance, why not really? And actually, Keeve already answered, so I'm going to hold Keeve's comment. But, you know, I might as well just tell you. Keeve says nothing makes sense because big money is out and it's a low volume day, which is exactly right. There's a holiday on Monday, which is causing volatility today, meaning low volume, retail traders in, and bigger swings because money makers aren't spending slash managing like usual. So of course Key would know, right? He was like, Kevin, we talked about this a week ago. Abraham, the only sense I can make now is that for me it's almost lunchtime. Kevin, should we be out of the market today? Period. And so understanding something, when you have a holiday and big money, you know, takes off Wednesday, right? Yesterday was probably the last day. Been a great couple of days. Monday, we were up $400,000, 400 plus, 421. Tuesday, we're down 75. Yesterday, up 236,000. Today, I might end up down again. It looks like 42-ish right now. So I'm down about 0.33 on a 0.41 market. But in all essence, today is a day, and tomorrow as well are just get through it days with no trend follow through expected. You don't expect a trend to follow through when you have low volume, and I can't spell, when you have low volume and it's just retail traders in. So in all honesty, I usually tell you guys, hey, as of Wednesday night, don't look at the markets. Don't worry, Keeve and Jeffrey and I are watching it for you. But on days like today, don't look at the markets. Don't pay attention. Go enjoy your holiday like big money does. Go on vacation. So go on vacation means go from your bedroom to your living room, right? Go from your bedroom to your back porch. If you're a New York person, I know Jeff Schaffner is, you know, and I don't know where he lives, but if you live in a big building of some kind, the way he describes where he lives, it's sounds like it's a penthouse in New York. And I'm not putting you on the spot there, Jeff, but go out on the balcony and overlook the city. You know, go down to the front doors and take a walk around the block if you can. It's days like today and tomorrow that have no trend to follow, no volume, or very low volume, I should say. And it's just something that you have to be considerate of if you're going to place a new trade. Can you follow the trend short term? And I knew you were going to ask that. Of course, Lance. Can you follow the trend? I could just put trends. Trends short term. So yes, of course you can. But you would basically be day trading. If you're going to follow the trend, it's got to be a one-day trend. You're going to follow what's happening today. And again, at 6:30, futures were down, they were up, they were down, they were up. If you take a look at a chart today, if we could pull up the S&P, I'm going to use the SPX because that's what I pretty much would follow. Talk about a wild morning. So that's where it closed yesterday, after hours. Where's today? Wild futures move. Up, down, up, down, up, all in that first half hour. Down, trying to find some support, a big drop down, trying to come back up. I mean, you can see support and resistance levels. It's just plain and simple, nothing that you can put your hat on. So if you were to trade, it's not something you'd want to hold overnight. Trend tomorrow can be completely different, and the trend tomorrow will have even less volume on it. And if I was you, try to take some profits. What can we take profits on? 2 weeks ago, we had some Facebook trades that Keith suggested. Target that I talked about exiting last Thursday. In fact, you could have exited Target. In fact, let me just go through some of these. About 3 weeks ago, we talked about an Apple trade. Most of the Apple positions, 41 at 54, 43 could exit at 66, 42 can exit at 51. Most of the Apple trades, you have the opportunity to go ahead and get out, and to be nicely profitable, is what I would tell you. Boeing, we don't have the profitability on Boeing unless you, nope, we don't have the profitability on Boeing. Bank of America didn't do. Baidu calls, a lot of new Baidu calls you could be getting out of. Those that followed the January 135s that were about 4 weeks ago, 425 worth 557. You have that one you could be getting out of that was a new one. We got out of all of our target, but Facebook, if you were looking at any Facebook, again, Keith talked about it a couple weeks ago. Slight profit in the 220s, 47 to 48, a slight profit in the 225s. Some of the older ones, 36 to 36, a slight profit there. Where's the new ones that we had in there? What if we already took those profits? Most likely. And again, Visa. If you listen to us on Visa, we would have suggested you exited this last Thursday. But most of the leap calls that we put on 2, 3, 4 weeks ago, $25 here on the June 22 200s, $24.52, you can get out at $28.95. We have January 22 200s, $11.74, you can get out at $25.82, 100% return. January 22 215, $17.86, and get out at $18.45. January 22 220s, $12.49, you can get out at $16.72. The bulk of everyone, June 22 200s, $25, you can get out at almost a $4 profit right now at $28.95. June 22 205 for $22.25 and get out at $27.57. So you can use the low volatility. You can use the low, it's not volatility, low volume, high volatility to exit trades profitably, obviously, right? Just trying to think out loud there for you. Big thing coming up, number 2, right? So let's go ahead and put a number 1 there. Let's go ahead and let's put a number 2 there. Opening up the economy in all 50 states. Right now, in some way, shape, or form, the economy is being opened up in all 50 states. Let me refresh this. Kind of unfortunate, but we will probably expect to see it. Where are my graphs? I want US versus numbers. So here we go. Looking at the US graphs, and I keep going back to the single graph that matters the most to me. Right here. What I want to see is that continued daily new cases continue to head down. I said on Thursday last week, we're probably looking at 8 more weeks, right? A peak and a trough, a rounded peak and a trough, a rounded peak and a trough. We're calling this on April 25th, the peak, right? The peak of all the daily new cases, where from here, we're hoping at this point, we're hoping for lower highs and lower lows. Boy, too many people for 3 days thought we were straight down. Obviously have tons of hope and very little common sense. Almost peaked up as high, but came down low, but here all of a sudden we have a higher low. So we haven't quite hit the lower highs and lower lows. We are hitting lower highs for the 3rd time and a lower low, but now through this little time frame, right? Low, high, low. And now we're coming back up. We're not looking right now at a lower low. In fact, this might be our low. And most likely with things opening up, we're probably going to have a higher opportunity for people to contract the coronavirus. And we're probably heading up. This throws my theory of looking at the data and saying, hey, things should be getting better. We don't have a typical chart right now. We just don't have the lower highs. Well, that kind of looks like lower highs. It does. But in all reality, we have it, and then we flatten off, and then we come down and we're flattening off. So it might be one of these things for a while. After we come up here for a bit, because we're going to put more people at risk. And it probably is going to look something like this. For the lower lows, problem here, problem here. We are not fighting lower lows. In fact, boy, if I could just draw it like that, right? We don't have lower lows. We have lower highs and a plateauing or a stepping of lower highs, but we do not have consistent lower lows. Low, up, low, up. It's just not there yet. I must say, as I was driving yesterday, rather kind of a bum to see gas So in Utah, gas went from $1.84 to $2.15 in a week. We're opening up. We're going to have, and all 50 states right now are open in some regard or not. The question will be, does this mean more new cases? What do you guys think? If more people are back out mingling and going to stores, and for me, golfing, for me, letting kids go to freaking friends' pools, we're going to have more cases? I've got one answer that came in yes, and one answer that came in, of course, dummy. Yes, we probably will, right? No guarantee, but as we start to get things back together, we're probably going to see more people contracting the virus. Please remember, this is a virus. There is no vaccine that will cure it, but there are vaccines that'll build up the antibodies. So yes, we probably will have more cases. You've got to take into consideration for your trading. Well, do we go longer term? Do we try to get through where you're going to see maybe some states go back up to shutting things down? But in opening up the economy in all 50 states, it's going to be different, most likely, for every single state. The comment was just made, cases related to the degree of effective protection. And I don't know if we have protection for it right now. I still think that it's pretty foolish to wear a mask because it still, particles go through the mask. I don't know. It's there to help you not touch your face and give yourself the virus, but I think a mask is pretty foolish protection. We just had I'm pretty sure it was the Center of Disease Control say, oh, by the way, you don't have to wipe off your stuff from the store. The virus doesn't live on products, right? How did it say that? I sent it to my wife here. Let me find it. It says, I sent it to the family. Hold on. It says, CDC now says coronavirus does not spread easily via contaminated surfaces. So all of a sudden, surfaces, tables, door handles, packages from the store, all of a sudden, we're now saying that the coronavirus does not easily spread this way. So let's face it, nobody knows. Nobody knows what is happening, how contagious, how deadly, how to prevent. And, it's just, well, I guess the prevention is just to quarantine everyone for 2 weeks, right? It's just, let's face it, we're a whole bunch of I don't knows. So with that, number 3 that I was going to go over is credit versus debit trades. The comment was just made, everything has been speculation. I agree. I am still calling the coronavirus a bad flu. It might not even be a bad flu, it's just the flu. That doesn't mean that I'm not worried for my little daughter. I would absolutely hate to be wrong to let these three run off to go swimming and risk losing her. But that's the position I'm in right now. Other than a low-grade fever, we're okay. So credit spread versus debit spreads, right? Credit spreads. Credit 30 days or less. It'll follow, actually, let's say it this way. It will make money in a sideways range bound price. So if I was looking at a stock that I really like right now, something I'd feel comfortable trading, I'm looking at a chart and I'm saying, okay, what do we have that's going to hold a level of support or resistance? You know, target great earnings, but it's not being rewarded. It might already be built in. Could go down to the 109 period of time. Not so interested in target. Excuse me, I have sneeze in your ear. Apologize for that. If I was looking at a credit trade, I want something like Apple. Apple where we have a big round number. Apple that has a pretty good put in place from buying their own shares. I'm taking a look though. I really do wish that right here we were more in the middle of the RSI chart. That would make me feel comfortable. I like having a pivot point at 312. I like having a big round number. I like being in the money. I like being in the money on a bull put type of position or credit spread. I don't like though. Sorry, we have someone try Costco. Could be Costco, but I don't like Costco's chart. I'll explain why here in just a second. I don't like that we're in that overbought where big money is put into Apple already. But as you can see, it can stay that way for a while. So if I was truly looking at a credit spread, in the money at 300, a support level, it bounced off of 300, has a pivot point. I'd feel more comfortable if the 50 or 200 day was also there. But because it's Apple and because it has money where they're buying up their shares, they have an Apple put. Why would I choose Apple over Costco for a bull put a credit spread? I do like this one because we could do something below the 50-day and the 200. What I was going to say, it doesn't seem to hold the 300. It breaks it. Even if it is just for a little bit, I'm worried when we get into this range. It's also bearish, which would tell me if I did a bull call, I'm not comfortable. I'd have to do a bull put. I would not be comfortable. I'd have to do a bear call. And a bear call for a credit spread would have to be above the 310. And I just don't like it. We also have bearish looking here, almost bearish looking here. I don't know if I'd feel comfortable thinking right now on Costco that it could hold some support or resistance. So a bull put credit spread would not be what I'd be looking for. I'd probably feel more comfortable on a covered call credit spread if I had to. And I'm definitely not comfortable with a 310, 315 bear call. So again, I'd be looking at something like Apple. And I would just be going for a short term. So I'm going to go ahead and I'm going to pull up my options for May 22nd wouldn't work, but I'm going to look in this range right here. If I was looking at where I'd be going, I would be doing a bull put. I would sell the 300s and I would buy the 295s. I only get 40 cents of credit. 40 cents of credit for a week and a day. Not bad. The minimum I would put it on would be for 40 cents, but 40 cents for $5 of risk. It's a one reward for 12 and a half risks. That's tough. I just wouldn't appreciate that. I'm looking for more reward for risk, right? Going out and checking a June 5th. This is the process that you're looking for doing a trade. Hey, if I go out 2 weeks in a day, I can get 65 to 68 cents. That's better, right? Risk on reward is down to about a 5 1/3 risks for one reward. I like it, not bad, but I want to really be in that 4 to 1. That's what I consider a good credit trade. If I go to June 12th, 3 weeks, we're almost there. We're 84 to 90 cents. So it's 4 1/4 risks for every one reward. If I only wanted to get out in 40, with a 40-cent credit, this is the one I'm looking for. 40-cent credit. I'm getting out at a June 12th, 3 weeks in a day. Lose half the value. Have Monday off, so it's an extra day of time decay. Big money comes back in. Might have a little pop on Tuesday. This is the, hey, take half the credit and run trade. I'm getting into this one for an 88-cent credit minimum, and I'm trying to really get out with only 40, 45 cents of profit. If I'm in to get the whole thing, I'm going out to a June. One reward, I want $1 credit for 4 risks, $1 credit for $5 of risk. Here's your 1 to 4 risk to reward ratio. It's one I'd be looking to stay in the whole time. I would want at least $1. $1.05 would be better. But this is the one, if I want to stay in for my whole credit, I'd be looking at this one. So if I only wanted half the credit, I still would go to a week sooner. I'd go to the June 12s, trying to get that half that credit because I want less time. I want time decay to pick up. If I'm going to be greedy and I want the whole credit, boom, I'm going to take this one right here. I'm going to take this one. I'm going to say, you know what? Go for it. Go for it. I want the whole $1 credit, 1 reward for 4 risks. And the analysis looks a lot like that. Pretty amazing little position to be in. To look at it more on a individual, see if I can pull this up so I'll have simpler numbers to use. Give me a second. Here's the little account that I have. That. Definitely going to stay in for the $1.05 credit. And there's a snapshot analysis that puts it better. If I were to do 10 contracts, you'd be making $1,050, but you'd be risking maximum loss $4,000. In all honesty, if I was doing this one in any account, if I had $500,000, I would run it just the way it is right here. In a smaller account, I would probably be down to, well, I would do 4 contracts, I believe. Four contracts for me to make 400 and try to risk 1,500, 1,600. This is the range I'd be looking for based on account values. I could always put it in the trust account, but if I was going to do a credit spread, this is what I like. $17 in the money. The Apple put by buying new shares, 4-to-1 risk to reward. And even though if I do want to get out with half the credit and try to get 50 cents, I could still use this one. But if I was doing it a little differently, if I only wanted to get half my credit, I'd be cutting my time down to get out of it quicker. I'd be doing this one right here, looking at an 88-cent credit. Some of you, oh, I love credit spreads. I don't. In all reality, I would switch this one around to something like calls, where I could be more in the money. I could be like at a 310, 315. I'd much rather spend $3.10 to $3.22 to try to make $1.80. I also, if I was trying to do something like this, I would probably go out to July. I'm just looking for the bounce. Look at that, 310 to 320. I just picked up a whole extra month for a debit spread where I have less risk. I've only got $3.10 of risk here instead of $4. I've got a whole month to get a bounce, and I can make, instead of just $1 credit, I can make $1.90 to the upside on this one. This is why I prefer debit spreads. I'm willing to spend money to make money. Less risk, less probability, but it's less overall risk for a greater reward. No brainer. For me, a no brainer. I, without a doubt, bull call Apple to try to make that dollar right here. And if I'm wrong, if it goes all the way back down to 310 or 300, excuse me, I can sell off my call, roll it down below for a 305. Because of my chart, I've already got my bearish position in place. And I've got room to make my adjustments. A lot of people ask me, well, Kevin, how did you decide on these figures? Well, it's simple. I tried the Junes. I can push out a whole nother month to July. I get a whole nother month to make sure Apple's trading above 315. They're buying $50 billion of their stock this quarter, or they can, I guess is a better way to say it. I've got the Apple put in place. I need to know, I need to move that 315 down to a 305 if it tanks to break even or make a little bit of profit. hey, I'd much rather spend $3 than risk 4. I'd rather have the opportunity to make $2 than only make $1. It's these processes that go through my head as I'm thinking, what kind of trades could I do and why? I'd much rather use Apple than Costco. Technical setup. Costco breaks regularly the 50-day, so I don't feel comfortable using the round number of 300 like I do Apple's number at 300. But Kevin, you have the 50-day and the 200-day. I know we had that in March too. It didn't matter. Apple has $50 billion to buy more shares. Costco, not quite so much. In fact, for a part of me thinks the Costco run has already been used up. For those that are in Costco leap calls that have played the up and downs, next time Costco's at 310, take a couple more leap calls off. If you have 3 or 4, keep only 1 in place. Well, Kevin, it could get back up to 324. It could. But that was the best when everyone thought people were hoarding at Costco. I'm not sure they had that same momentum behind them. But any questions that you guys like to ask in regards to credit versus debit spreads, what I see, how I would do it. I knew I threw a lot of information at you today. Anything I can do to answer any questions? Got a couple phone calls that came in. All right, guys. Hey, have a wonderful holiday. Most likely we will be pushing everything next week. So Monday will be Tuesday, which means Tuesday we'll run our market commentary. Tuesday will be Wednesday. So Wednesday we will run our Wednesday evening. Our Wednesday evening trade findings and adjustments. Instead of a Thursday morning, we'll probably do a Friday morning for our trade findings and adjustments that we usually do on Thursday. So next week, we'll probably shift everything one day. Please take Monday off. Enjoy your day with the market closed. Guys, it's a pleasure being with you. I will have this posted here shortly, and I hope it was helpful for you to see what we're looking at and why, how we're judging to use our trades and why, and that it's okay to go ahead and take profits when you have them. Guys, be safe. Enjoy your 3-day weekend and your holiday. Look forward to seeing you Tuesday night. Take care and be safe. Bye-bye.